All right, let's move to the next slide. Here again, I have made the chart of the FARS stock smaller so it can be seen better on the two peaks that exist here and correspond to the decline that occurred afterward. Next slide. Well, it's the same here again. You can see the national company. Like Iran, we have several points where we see several peaks together, and we are actually witnessing the connection of these points with a positive slope on the RSI. The slope is completely negative, and after that, the decline that has appeared on the chart. Well, up to this point, we have observed the phenomenon of negative divergence together. For the occurrence of the negative divergence phenomenon, to prevent you from making mistakes, I'll mention a few points. Keep these points in mind. Then you can easily identify divergences. Guys, now in negative divergence, the first point in negative divergence, we always deal with peaks. That is, two peaks on the stock's price chart, two peaks on the RSI and the stock. This one and two are always on the price chart. On the price chart, our line has a positive slope with a positive slope and on RSI, the line with a slope negative. So on the RSI, negative slope. On the stock's price chart, positive slope. And the next point, the trend before the divergence, positive. Means the chart has a positive trend. At the end of that positive trend, you see two peaks, and there you see two corresponding peaks on the RSI. You have drawn the two peaks of the chart together, a line with a positive slope. Drawn the two peaks on the RSI, a line with a negative slope, and then the phenomenon of divergence occurs. But in positive divergence, consider this as negative divergence, this as positive divergence. In positive divergence, we always deal with the troughs. 1, the troughs. 2. It is exactly the opposite of this situation. That is the price chart of the stock. The price chart. Slope. Here the slope was positive. Here the slope is negative. And the slope of the RSI is positive. And third, the trend before the divergence was positive. Here the trend before, the negative divergence. Well, let's go through a few examples of positive divergence together. Look, dear friends, we said in positive divergence we deal with troughs. Look here, 1 trough, 2 troughs. Look at the RSI, 1 trough, 2 troughs. The price chart has a negative slope. See, I connected the troughs together, creating a line with a negative slope. Look at the trend and the RSI. They connected them, a positive slope was created. The trend before the negative divergence. See, we have a negative trend after which this divergence occurred. When the price chart has a negative trend, and then we reach 2 points or 2 troughs from the mechanics of connecting those 2 troughs, we had a line with a negative slope. However, corresponding to these 2 troughs from the mechanics of connecting 2 other troughs on the RSI, a line with a positive slope was created. Kids, here you have the phenomenon of positive divergence. And positive divergence tells us that after the second trough, we will strongly witness an increase in the price chart. You can also observe this increase here. The phenomenon of divergences, learn them very well. They are very powerful in your analysis. Another point is that divergences, like price patterns, do not necessarily have to exist, but if they do occur, they show themselves with strength. So let's move on from positive divergence. Let's see another example. This chart that you see is the overall stock index chart. The overall stock index in this time frame followed a negative trend, but at certain points, it started showing signals of positive divergence, which made many analysts happy. I remember during this period, everyone was saying that this positive divergence phenomenon on the index would soon turn the market positive. In these areas, see, valleys have formed a line with a negative slope. Valleys have formed a line with a positive slope, after which the index was positive for many, many days, almost continuously, and we actually predicted a month of positive market here. Let's move on to the next slide. Let's see it together. Well, and that's again, like Iran's national, previously we saw a positive divergence. Now we are seeing a negative divergence we are also seeing a national trend. 1, a downward trend. 2, a valley line with a slope. An RSI trend, RSI valleys, a line with a positive slope. And from this area, we should witness the growth of FAMI, which this powerful growth has also occurred. Next slide. Well, here we are seeing 2 divergences. It's actually positive together. For the share of partnership, there is a downward trend in this area. It did 1 bottom in 2 valleys and a line with a negative slope but corresponding. With that RSI, a positive slope, and the growth we see on the chart is continuing on. And again, the trend became somewhat negative, but immediately another positive divergence appeared here. And a line with a positive slope emerged on the RSI, and then a powerful upward trend on the MELI symbol we saw on symbol 20. Let's go to the next slide. Well, here you see the CRUI chart. And it says here, a negative trend for CRUI, a powerful phenomenon of negative divergence on the chart and on the RSI. Positive divergence on the chart and on the RSI. And after the positive divergence phenomenon, we witnessed a powerful growth. We were the strongest in the spherical share chart. The next example, you see Postbank Company with the symbol V Postbank, had a downward trend in this area, where exactly several points emerged that formed a process, created a line with a negative slope, and then on the RSI we see lines with a positive slope, followed by a growth that is noticeable and significant. A tension appeared on the chart. The point we discussed with you regarding the topic of divergence phenomena, well, actually gives you an important hint about the divergence phenomenon, and you should know that in divergence phenomena, in an upward trend, a resistance higher than the previous resistance is formed. And these were the peaks we explained about. We said 2 peaks on an upward trend, and here it actually shows us a resistance. But it results from connecting corresponding points in linear fields with a negative slope, which is the definition of negative divergence. And negative divergence means the depletion of trend energy. Why trend energy? Because we are conducting this research on the RS. We are conducting this research, and SI itself is the relative strength of the stock's price chart. And when we enter the discussion of negative divergence, it means the energy or strength of the stock's price chart is decreasing. And as I mentioned to you before, the phenomenon of divergence is a very strong and important indicator for your final decision regarding buying and selling stocks. Well, we reviewed the first powerful technical analysis oscillator, the relative strength index, or that's RSI, together. Now we want to talk about the second powerful technical analysis oscillator, the moving average convergence divergence, or MACD, which is often referred to by its abbreviation in many books. MACD is the second powerful technical analysis oscillator. I have provided a very brief definition of MACD again. You can see that MACD is an abbreviation for moving average convergence divergence. It is a trading indicator using technical analysis of stock prices created by General Apple in the late 1970s. Whenever you want to have a definition of oscillators or technical analysis indicators, you can easily use Wikipedia, where there are accurate, complete, and comprehensive definitions available. Right here, before we leave the Wikipedia page, we want to give you an explanation about the form of MACD. We previously saw that the price chart of the stock experiences various fluctuations, and below the price chart of the stock and the RS, we previously reviewed it together. But MACD generally consists of a series of positive and negative histograms that revolve around a zero line. That is, if I want to show you the MACD here, look at these histograms that you see in these areas. This is the zero line that passes through the middle, and there are a series of histograms above and below it. These histograms are the main MACD histograms that we will get familiar with on the software. And we have two lines here. These two lines that you see are the two lines that function as the DAA lines. And another line on the chart that I won't talk about much. I don't want to talk too much about these two lines so that your mind doesn't get preoccupied with them. Why? Because when you implement the MACD, you learn that you should remove these two lines from the chart, and we only need the histograms. These two lines are the MACD controllers. That is, these two lines actually, it can be said that the interaction of these two lines creates the histograms. Above and below the zero line, the histograms are created, and after you have drawn the MACD, these two lines have fulfilled their function and are then removed from the chart. We can later see the desired signals on the MACD histogram. The point you need to pay attention to is that on the zero line, where the MACD is below the zero line, we have what is called a negative MACD, and where the MACD is above the zero line, it is a positive MACD. However, we do not need these. We receive signals when the MACD crosses from below the zero line to above the zero line for the first time. That means I can now